Hello guys, welcome back to my YouTube channel. I'm Castaway Trader. Today I'm presenting my most sophisticated and advanced cycle trader indicator for TradingView. It would be just an introduction, so I'll show you what it is capable of. For example, here you can see a chart of AMD 30-minute chart, and you can see that indicator attempts to catch pullbacks. So when you see a green background, the indicator detects an uptrend. When you see the red background, the indicator detects a downtrend. And the whole idea is that you really need to learn to trade with the trend. So when you have a green background, you only take long trades, and when you have the red background, you only take the short trades. And you can see that indicator is capable of detecting swift changes in between of bull trend to bear trend and back to bull trend. So the whole idea behind that indicator is the strategy of trending with the trend. So you buy pullbacks in an uptrending market and you short pullbacks in the downtrending market. And here's another example, AS mini chart, 30-minute chart, and here again you can see the green background, so the indicator detected an uptrend, and you see a string of buy signals, and you can see thin lines. This is how the indicator detects an underlying cycle, and it helps you to pinpoint the entry points and exit points. And here you can see that price drops under that support, invalidated the long signal, and then price came back up. First, the dark red signal, it was an evening short signal, and we will talk about that specific signal in the next video. And here you can see a strong short signal. Price tested that thin red line, the cyclical resistance, and then dropped hard into the open of the first trading day of 2024. And again a pullback, another push down, a pullback. The indicator detected another short entry and dropped to a new lower low. I described hidden mechanics behind trending markets in my video course for beginners, which is called Trade with the Trend. I would add a link to that course in description of that video, and I will add discount coupon. This is another chart of AS mini. This is January 2024, and you can see that was a string of short signals until price went over the cyclical resistance, came back down, retested it from above, and started a new uptrend. This is where we got my newest trading signal, evening buy at 9 p.m. Eastern time, and look at what happened next. The price kept charging up like crazy. So I want you to read that important disclaimer. Past results are not indicative of future profits, and that indicator is only for educational purposes. This is the slide from my video course Trade with the Trend, and here you can see how bear market transitions into bull market. You can see that during the bear market, bears pushed price to lower lows. Look at those red dots. Until we get exhausted, price consolidates, so we call it accumulation period. Then price starts pushing higher, making higher highs and higher lows. This is how the trend works. So a downtrend is a sequence of lower lows and lower highs, and an uptrend is a sequence of higher highs and higher lows. This is why experienced traders prefer to take trades in direction of the trend, because even if you shorted a bit early like here, because of the underlying bearish trend, that market, the downtrending market, will let you make money. And when you are dealing with an uptrending market, you can buy a bit early here and price will go lower than you bought, but eventually it will go higher again and you will be able to make good money because price will tend to make higher highs. So the strategy of trending with the trend is a forgiving strategy. It forgives technical mistakes of traders. That is the principle number one behind that indicator. The principle number 2 is that price never travels from point A to point B from the bottom to the top in a straight line. There will always be pullbacks. Look at the chart of GBTC, a Bitcoin fund, in February 19, July 19. There was a big rally, but look, price did not went up from February until June. It kept pushing up and down, up and down, up and down. And you can see that every time it pushed up, it made a higher high, then it pushed down, there was a healthy pullback, and that pullback would make a higher low. And those pullbacks are perfect opportunities for traders to go long. I hate chasing rallies, and I always would wait for a pullback. And look at those red boxes, and you see those red boxes are healthy pullbacks, would allow you to enter into that bullion trend, but you would not be chasing the price, you would not be risking a situation when you go long at breakout and that breakout turns into a fake breakout. So the strategy by pullbacks in the uptrending market requires you to identify first when the market starts trending up or trending down, second when the corrective pullback reaches a support and bulls look ready to start a new push higher, and third when the corrective pullback reaches a resistance and bears look ready to start a new push down. So the theory is pretty simple, right? So the idea was to code an indicator that would be able first to identify a trending market, to correctly identify a direction of a trend, and second to identify a pullback and identify that moment when a pullback reaches a point, a tipping point, when, for example, bears are getting exhausted and bulls are ready to step in and ready to push price again to a higher high. In order to identify the trend, I came up with the idea of daily support and daily resistance. We need daily support and resistance to correctly identify trend direction. There are three main types of intraday setups. A breakout, when price gets to the resistance and goes over the resistance and triggering a rally. Second, a rejection, when bulls try to test a resistance but they fail to get over the resistance, so price drops back into the range. And finally, a failed breakout, when price gets to the resistance, bull pushes price over the resistance slightly, it spends some time over the resistance and drops hard under the resistance, and that type of a failed breakout would normally trigger a strong drop. Very important principle in trading is a zero-sum game. That means that either bulls win or bears win. If bulls win by pushing price over the resistance, they normally trigger a strong rally because bears have to chase, they have to cover shorts. In contrast, if bulls fail to break over the resistance, they push it over the resistance, they get confident we did it, they add to longs, but then bears step in, push price under the daily resistance. This is what triggers a strong decline. So strong moves are triggered by failed moves. Another important story that was coded in that indicator is early reversal. The indicator produces the evening buy and the evening short trading setups. Those are easy to trade setups, and they are indicated, we are triggered at 7 p.m. Eastern time, so you can trade, you can make a trade on the way home from your office, and you don't need to stare at the screen the whole day. You just need to check that indicator at 7 p.m. at 7:30, and you can see that signal. You can take a trade and you will see a clear stop loss. And when we get an evening buy, price tends to rally not only overnight but on the following day, and I will record a special video about that specific signal, so stay with me and subscribe to my channel. So daily support and resistance are the most important two levels that should be closely watched by day traders. Those two levels form the expected daily range for a market in a balanced condition. But the most reliable trading setups can be found in a trending market when price actually gets out of that range. Either it gets over the resistance and starts trending up, or it gets under the support and starts trending down. Then the price stays inside the daily range, under the resistance and over the daily support. That normally turns into directionless whipsaw, which is very difficult to trade even for professional traders. So you may make a commitment not to trade such whipsaw market at all. And it's very difficult to identify it with your bare eye where the market is trending or where the market is in whipsaw mode. This is why you need an indicator like that would let you clearly identify what condition you are dealing with. Is it a trending market or a whipsawish market? In an uptrending market, the broken resistance becomes the key support for intraday pullbacks. So that rule would save you thousands of dollars. This is the foundation for your trading. This is what you should understand. In an uptrending market, we barely have any resistance at all. So we only deal with support. And when you get price getting out of the range, so the red one is daily resistance, the blue one is daily support, price gets over the resistance and turns the resistance into support. You see, evening buy signal is fired here because after the close at 4 p.m. price gets over the resistance of the following day. So that resistance is valid for the following day, but it was printed on the previous day at 6 or 7 p.m. And once it gets over the resistance and confirms the uptrend, it keeps chugging along higher overnight and up till noon of the following day. Then it goes back again, small pullback, and look where that pullback stops, right at the daily resistance. Again, in an uptrending market, the red daily resistance becomes your important key support. So as long as bulls hold price over the broken resistance, this is a great official confirmation that you are in an uptrend. And look what color of the background is here. This is the green color. The indicator made that homework for you. It reminds you, man, you are dealing with an uptrend. Don't short this. Try to get long on a pullback. What pullback you should expect as a good level to go long? If price comes back down to the broken resistance, and you see it keeps trying to get under, but every time bears just failed. And look what happened now. Inevitably, after numerous tests of that key daily support, price goes up again and makes a new higher high, and then the same story happened. And then you see 29th of December, when price starts the day under the daily resistance, it tries to get over, it got over and then immediately drop under. And you see it gets into the range, and that is the first warning for bulls, because again, bulls want to see the price hanging over the resistance. Once it got into the range, that means the distribution phase has started, and if price drops under the blue line, the daily support, that means a breakdown. That means the bullish party is over. But look what happened then. Price anyway came back up, retested the blue support from below, and that was the official short signal. That was the official trigger to consider trend changed from the bull one, green background, to the bear one, red background. And the same principle applied. In an uptrending market, the broken resistance was the key support. In a downtrending market, the broken support turned into the key resistance. So in an uptrending market, price spends 80 to 90% of the time over the broken daily resistance. In a downtrending market, price spends 80-90% of the time under the broken daily support. So this is a great example how that, remember in the previous slide I showed you when trend changed from the long one from the green one to the red one, from the bullish to the bearish. On the first day of January 2024, we got a great evening short setup, and look what happened then. price went up to the cyclical resistance seen red line, and it tested the broken blue daily support from below, and that is a great short setup. Look at the strong short that followed, strong drop that followed. Again, price tried to consolidate and could not even approach the broken blue daily support. As long as bears hold price under the broken daily support, those blue lines, you can be sure you are officially in a downtrend line, and down remains the path of the least resistance. That has a great implication for your trading strategy. That means that as long as price is trending down, you only consider short setups until bulls manage to get first into the range. You see, price went over the blue line, the first warning for bears, then it came back down and retested the blue daily support from above. We tried to break under, we failed. That is January 8th, 2024. They reclaimed the daily support, the blue line, and started to trend up again until we officially broke over the daily resistance. And that breakout was confirmation that the bear trend is over. The evening of that same day of January 8th, price at 7 p.m. triggered an evening buy signal, and we got another rally. That evening buy setup, which was fired at 7 p.m. Eastern Time on 7th of January, was followed by a flat consolidation until the next morning, and then the cycle trader indicator fired a strong buy setup, and strong buy setup was followed by a strong push up, another buy pullback setup. You see price build a base right on the seen green line. This is the cyclical support, which is drawn by the cycle trader indicator. Another push up, and look what happens. First we got our green background, and look where the red daily resistance is. Price left it behind. Price is moving over the red daily resistance. Only here price dropped to the daily resistance, but because it started the day over the daily resistance, that was a confirmation of the uptrend. And when price starts the day over the daily resistance, you expect the red daily resistance as your key daily support, and you consider a pullback to the daily resistance that fails to break under as a great long opportunity. And in the next video we will talk about purple lines. I call them the secondary resistance lines, because if your daily resistance becomes a key support in an uptrending market, you still need to know where price may be going to, and this is why those secondary resistance may be of help for you, because they'll let you know where price may go. But again, in an uptrending market, you don't have the real resistance, so the sky is the limit, right? You've heard that old adage. Those purple resistance lines become your profit targets, and you see price retested the red line and pushed up right to that secondary resistance level, the purple line, and that was a great spot to close your long position. And then the following day, it built a base along that daily resistance until it finally broke over it, and look what a huge rally we got after that breakout. The same principle apply for the secondary support levels. So if in a downtrending market the blue daily support becomes the key resistance, so you should know where to cover your short, and that dark green secondary daily support becomes those levels where it's a great place to cover your shorts. Again, I will record the next video talking about that secondary support and secondary resistance levels. So this is how my website looks like, and here I have the whole section. It's called proprietary indicators, and you can read more about my indicators. And the first indicator in the list is that cycle trader indicator I just introduced to you. You can click learn more, and you can see several charts here, some brief description, and you can subscribe to that indicator, and you can pick a monthly rate, $49, but you will get not only that indicator but the whole collection of all my proprietary indicators, and you can read about those indicators in the blog, and I will post a link to the blog in the description of that video. Hey, I'm Castaway Trader. It was my pleasure talking to you today. Please subscribe to my YouTube channel, leave your comments to that video, send your questions and ideas to castawaytrader@gmail.com. Thank you so much and good luck with your trading.